Palantir stock is now profitable with air quotes and with an asterisk. We'll discuss that and more on today's show. What is going on, investors? Hopefully guys are doing well out there. We're going to talk about Palantir earnings. They came out yesterday after the bell. Those Q4 numbers came in. We'll get into the financials and we'll come over here and look at this from a technical perspective. Both are very interesting. Most interesting is the fact the company says that they're, quote, profitable. I'm sure Tom Nash's Patreon is just on fire today. The CEO leading their press release saying, with this result, Palantir is profitable. This is a significant moment for us and our supporters. Now, I don't know if the CEO of this company just realizes a lot of their investors are somewhat naive, but when we go through this financials, the company actually is not profitable from an operating perspective. And if you followed the channel for any length of time, you talk to any sophisticated investor, it's about operating profits. It's not about net income. It's not about adding in one-time items that make you profitable in a quarter. Otherwise, you would actually lost money. So we'll talk about that in the context of those Q4 earnings, which again came out after the bell. Now, I'm kind of joking a little bit. Look, it is a significant moment for the company, and they absolutely have turned a corner from kind of an operating perspective. We'll get into that more in detail, but I do want to talk about the Q1 outlook. Well, I guess I'll gloss over. The Q4 revenue came in at $508 billion. That was 17.5% growth year over year. It was essentially in line, but it beat expectations by a little bit. We'll get into that obviously in more depth when we get to the profit and loss statement. But I do want to get to the Q1 guidance, which looks like it's going to be between $503 million up to nearly $507 million. Consensus before this was $520. I'm seeing now that after we've gotten guidance, it's walked back. Now it's sitting at $514. My guess is over the next couple of days or weeks ahead, you'll get analysts kind of in that $505, $506 range predicting that revenue. Now, the company, though, did essentially kind of reaffirm their full 2023 outlook. Always makes me a little concerned as an investor is the upcoming quarter is going to be coming soft. I mean, we're talking about like that's over $15 million lighter than what consensus was for Q1, but they're saying, don't worry, the rest of Q3 is going to be good. Now, Palantir's business model kind of has a longer sales cycle, so we'll give them credit for that, but I always get a little concerned as an investor is, hey, the upcoming quarter is going to be soft, but somehow magically we can look into Q2, Q3, Q4, and all of a sudden all the revenue is going to come back. We'll see if that materializes for Palantir, but for the full year, they're expecting basically $2.2 billion worth of revenue. Wall Street was expecting a number just under $2.3 billion. That would be kind of like high teens, maybe as upwards of 20% growth as we get to the back half of the year. I tell you what, if Palantir is able to deliver that, well, we've talked about it numerous times here on the channel. From a technical perspective, there's certainly some demand for this stock at certain price areas, and we'll talk about that more here in a second. But I want to get into these earnings because everybody's going to be saying Palantir's profitable. Palantir had a GAAP profit. Well, yeah, technically they did, but notice that the company is not generating an operating profit. But as soon as next quarter, it probably is coming down the pike. So you had that revenue of $508 million and some change. Again, that was 17.5% growth year over year. It did beat expectations. One reason why we love this company, and maybe why some people love this company, I don't know the infatuation with this company. I don't really get it, but I do get when you talk about the gross margins, because off of $508 million, we only had to spend $104 million. Those are about as good a gross margin as you possibly get. So you get a gross profit of $404. Now, unfortunately, we've got sales and marketing expense went from $163 million up to $190. What they did a nice job was controlling these R&D costs. It looks like this is kind of, maybe you could potentially believe this is kind of your annualized cost in that $80 million range, or your quarterly cost, if you will. And then look at general administrative. Company did a nice job. They actually drove that down from 157 down to 149. So give props to this company. It looks like their operating costs and their operating expenses have started to normalize a little bit. You don't see that exponential jump. So your total operating expenses went from 404 up to 422. So here's what I'm talking about. Off of $404 million worth of gross profit, you had operating expenses coming in at 422. You lost money. You lost about $17.8 million. But look, last year you lost 58. And look at it on the full year, you went from 411 down to 161. The company is absolutely moving in the right direction. But Palantir's business in this quarter actually lost money. Now, we'll strip that out from a cash flow perspective, from a stock-based compensation perspective. You get the idea, but they are talking about GAAP profits. You come down here to other income. This was the fact that they divested, I believe, out of a Japan Palantir business, and they got $44 million. So you had $17.8 million in losses. You do generate a fair amount of interest income to the tune of $12.7 million. In fact, that's more profitable than the operating the business. They have some interest expense. So they're very close when you factor in the interest expense or the net interest expense at this company, which actually turns into a positive. Well, they're very close operating the business, but you had this one-time, or I believe probably possibly a one-time benefit of a $44 million divestiture. So that led to your net income being positive to the tune of $33 million. Otherwise, it would have been negative or very much close to break even. You did turn a 1 cent profit on those earnings per share. We'll get more to stock-based compensation here in a moment, but you are seeing they're starting to trend this back in the right direction, starting to normalize it. All the operating expenses are normalizing. I know I'm kind of nitpicking this company a little bit, but I know the rocket emojis and the Discord servers are going to be firing on all cylinders, just celebrating the fact that Palantir stock is up 14%. I'm just telling you guys, pump the brakes a little bit. The stock is still down tremendously over the last year, down 34%. And look, the stock has done nothing, literally nothing, but it's certainly starting to turn the corner. These are the times when you start to look at these speculative stocks, when they're finally turning a corner. This is actually when you invest. Being an early investor in these types of things almost never works out. Come over here to the balance sheet. Company has plenty of cash. They're doing good from that perspective, has very few liabilities, nothing to worry about from a balance sheet perspective over at this company. The only read that you can really get from Palantir on their balance sheet are these accounts receivables, because they bill up front and then they have to wait to those months to roll over to realize this money, or in terms of revenue. Well, it went from 190 up to 258. So it's showing you they have plenty of backlogs of business. They've got deferred revenue down here on the liability side, again, ticking down a little bit, but the company looks like they have plenty of backlogs of business and they're starting to normalize their operating expenses. So that should be exciting. Now, from a cash flow perspective, here's how some people are going to analyze this company, because you're going to pull down a year-long net loss number of $371 million. Last year was considerably higher at $520 million. But guess what? On cash flows, we get to add back in dollar for dollar stock-based compensation, which for the full year came in at a whopping $564 million. Last year, it was even higher than that. It's $778. All your add backs and subtractions gets you to positive cash flow over at this company, the tune of $223 million for the most recent year on a company that is worth $15.8 billion. So you're paying some pretty hefty price for these operating cash flows, which again factor in rather aggressive stock-based compensation. But again, I don't want to gloss over the fact this company is at a turning point, and it looks like to me they'll spin operating profit by next quarter if they hit their target on their revenue outlook, which I can't imagine why they wouldn't. Anything north of $500 million worth of revenue should get you close to an operating profit. It might not actually squeak out by next quarter, but you're basically kind of in that break even from an operating perspective. And this is why, folks, that constantly, I'm not trying to be lazy here on the channel. I always stop at operating profit. I rarely come down to net income. I rarely come down to EPS. This is because we focus on what the business is operating at, not these one-time kind of investments or divestments. Those are great. You want to factor those in. Some companies maybe more than others. With this one, I would focus just strictly on this operating profit. And while it's still negative, it is so close to break even. And then when you want to factor in a lot of those operating expenses, or a significant portion of them is stock-based compensation. So from a cash flow perspective, you are positive. And the good thing about this company is they don't have a ton of investments, okay, over the last year. Just $40 million worth of purchase of property, plant, and equipment. Again, a positive cash flow of $223 million. That's not that significant. And that's really about it. The company did generate positive cash to their balance sheet over the last year. Now, what has not been positive is the stock performance. And right now, from a technical perspective, there is absolutely zero reason to believe that this technical pattern that the stock has really been in since it kind of took its initial hype wave and then finally began selling off in November of 2021, there's not a lot of evidence, at least at the current time, that this trend is not still intact. So you have some overhead resistance up here represented by this red line. You also have what I have in here is a purple line, essentially kind of a line in the sand for this stock, right about it's at $9.50, but it's really closer to, I would call it $10 per share. And here we are, we're butting our heads up against, again, lower highs from a technical pattern, the S&P 500. A lot of stocks that we've been monitoring, Apple, have been making this technical pattern, and you have to assume that the technical pattern is still in place till you're able to really push up over this one. And the complicated thing with Palantir is even if you push up over this $8.75 range, you'd still have to get up over $9.50. So there's two levels of overhead support. This one, in my opinion, you take some chips off the table here. You've had a monster rally on this stock from about $6 to about $8 today. While the shorter term momentum over the last, we'll call it 2 months with the stock has been there, the longer term momentum is still pointing downward. While the company and probably its supporters will scream to the heavens that they're making this GAAP profit, it was because of a one-time item. It wasn't that the fact that the operating profits from the company materially significant. And in my opinion, the company still has a long ways to go. I mean, we're still talking about a very long ways to go to growing into a $15 billion valuation. Again, we're talking about a company that is essentially break even. And even when you factor in stock-based compensation for a full year is generating just $220 million worth of operating cash flow, we are still looking at a company, believe it or not, that is still wildly overvalued. So they're going to have to need to reaccelerate this revenue growth and at the very least hit these targets, which in some cases might be very difficult. In fact, the company guided below consensus estimates for Q1. And if you look at all of 2023, you're south of $3 billion worth of revenue, meaning you're still trading 7, nearly 8 times sales for a company that, again, is break even. Still wildly overvalued, but Palantir getting more interesting as it's definitely turning the corner. Hopefully you guys enjoyed today's video. We'll be back again with more. Good luck with your investments.